Good morning and welcome. Patriot Radio News Hour. Joe and Jason. Once again, we're back here on this Tuesday. A lot of you had the day off yesterday. It was President's Day. The markets are back open and ready for business, and we're going to break it all down for you like we always do. But once again, the gold market's just not letting you in. Any pullback, you better buy it. Doesn't even matter, pullback or no pullback. The gold markets appear to be heading higher as, once again, overwhelming demand coming out. And from sources, like we said, that you don't really equate to gold demand. You got banks, you've got hedge funds, you've got, we already knew about central banks, right? We knew about sovereign wealth funds. And, of course, then you got, what we do, right? The investment demand side of it. But now it is literally turning into the richest of the rich, the biggest players possible, just gobbling up gold and bringing it to the, I guess, the West, if you will. We know that China has been bringing it east for, a couple of decades now? And now it appears that the West, maybe is the West trying to play catch-up. We'll have to wait and see. But remember, lots of talk about shortages in the London markets in particular. We've told you about what's happening in shortages in Korea. Now I'm hearing about shortages in Japan, shortages in China. These are on the retail side, what we do here, right? We're not seeing that here yet. But when it comes, you better look out. Premiums coming off the bottom here. So we've seen silver premiums jump 25 cents since Friday. Gold premiums up 1%. It's a lot. That's a lot. When you think about gold nearing $3,000, right? It's almost $30. A 1% jump in premiums. So buckle up here, 800-951-0592. That is our toll-free number. Of course, allamericangold.com is the website. And, we've been talking about, hey, what's going on? We have a physical squeeze. We've been waiting for silver, by the way, showing a lot of strength. Again today, we had profit taking on Friday. Jason, the markets, they were up. The gold and silver markets were open yesterday. They were up yesterday, up big again. Basically, the profit taking never happened. They're right back, challenging gold, challenging all-time high, silver back challenging. Now $33 to the ounce, as people have been speculating, will the U.S. revalue its gold reserves to do quantitative easing without having to call it quantitative easing? That was out of Mark Cuban from Bank of America, right? And he's kind of the guy when it comes to the Fed. They've got two guys. They got the Fed whisperer, the guy from the Wall Street Journal that the Fed kind of leaks information to. And then they've got Mark Cuban, who is the guy that essentially warns people, hey, I don't care what the Fed is saying. They can say this, they can say that, but I'm going to tell you what they're going to end up doing, because this is what is going to happen, particularly when it comes to the bond market, when it comes to quantitative easing, when it comes to quantitative tightening. He's the guy. And he just came out and said it. Here's why they would do it. It's not to make a balance sheet look better. Nope. Because it would. Hey, look here's an asset. Now, the government has three assets. PP&E. What is that? That's mostly property. Hey, we got you've heard the government, we got all these empty buildings. Of course, office buildings aren't worth the hill of beans right now. But having said that, hey, they may be able to get, I don't know, $2, $3, $4, $5 billion, but nothing huge, right? It's not like they can sell the Pentagon and the White House, right? They're not selling that stuff. Then they've got Fannie and Freddie. Well, I don't need to tell you, unfortunately, the defaults in Fannie and Freddie are rising again. And again, there's some money there privatizing Fannie and Freddie, but it's not a lot. It's not a lot. Revaluing gold, well, all of a sudden there's an extra $700-800 billion. And most people don't understand how this works. So the gold technically is owned by the Treasury. However, they use what they call a gold certificate that sits at the Fed. Right now, those gold certificates at the Fed are only worth like $11 billion. Well, if they revalue gold, that $11 billion turns into almost $800 billion. And then the Fed could essentially give the $800 billion to the Treasury. That's what they do when they created, that's what quantitative easing kind of was, without having to call it quantitative easing. Yeah, think about it, right? They want to drive that 10-year note down. Got all that and a whole bunch more when we return. 800-951-0592. Patriot Radio News Hour, Joe and Jason on this Tuesday. We keep talking about diversity. Be careful here. And I know there's a lot of people that get excited. Elon Musk and Social Security and, oh my gosh, the Treasury, $4.7 trillion, but they didn't say what it was. And the biggest fraud in history. They're great headlines. Unfortunately, that's all they are. So far, Doge I don't want to say it's not a bust. Unfortunately, we just haven't found big money yet. And that's kind of the problem. I think what we're going to end up seeing is most of the money we're going to save is going to come from layoffs. I think that's probably pretty clear as we're watching this thing continue to play out. The headlines are great. Be careful here. Let me tell you why. They're seriously talking about revaluing gold. This is a serious thing now. Notice how you haven't heard a peep from the Treasury Secretary. Matter of fact, the only thing he said is, we're going to get creative. We are no longer going to pressure the Fed to lower rates. Remember, Trump was hammering Jay Powell to do this. Now he's not. Now he just says, I want rates to go lower, right? But he doesn't tell the Fed to cut anymore. Why? Can't. Inflation's just getting worse. We had another, it wasn't an inflation report. We had a New York manufacturing report today, and all of them, they're just like, man, prices got more expensive again. It's a fact. One of the ways to lower these rates is quantitative easing. But gosh, the Fed can't admit to that. Right? Well, you'd lower rates to zero, then do quantitative easing. But you can't lower them to zero because you got inflation. It's real talk. How about Elon Musk yesterday? throwing his support behind the audit of Fort Knox. Rand Paul, the same. I mean, if you're going to do it, you probably do have to at least conduct some kind of an audit. And I want everyone to know, listen, not all the gold's at Fort Knox. The Denver Mint has gold. West Point has gold, right? So a lot of the other mints have some gold. And I'm not talking about a little bit. You know, you're talking about, over 1,000 tons in Denver, over 1,000 tons in West Point. This is starting to get serious, very serious. Just the talk of it is bad or good. Then you look at Wall Street. Do you know where the PE ratios are? Has anyone paid attention? Right, when we're looking at Wall Street and, bubble indicators, because I keep telling you, right, they've created this other bubble. They've created a new debt bubble. Well, the S&P, they call it the CAPE ratio. That's what they call it, which is just simply price to earnings ratio. It's at 38. By the way, the long-term average, 17.6. The real long-term average, I say the real, because 17.6, that's been the average since we decided, hell with it, we're not going to pay off the debt, and let's just run it up. So basically, since the dot-com bubble, that's the new average. The longer-term average is like 8. Well, when you look at the biggest ones that we've seen, well, you've got the Great Depression. It was like 33. Right? You had what we'll call the housing / financial crisis. It was at 28. Now, we did get to 38.6, right as the COVID money started in 2021, right? Hey, we're going to pay everyone not to work, free money, blah, blah, blah. And then the dot-com bubble, 44. So, Jason, when we talk about being diversified here, we're letting you know, hey, these are all signals of kind of peaks, right? In equity, what we'll call stock market pricing, right? This is the best of times, and we know what happens after that. Get your butt diversified. Stop sitting on your hands and get it done. Before gold premiums go back to normal, you know what? Before gold premiums go back to COVID-type premiums, we don't want that. You got big IRAs, and you haven't called us to get some of that put into a gold and silver IRA, you're on your own. It's dumb. I mean, it's just what it is, just dumb. You see what's happening. This isn't an accident. Remember, go back a couple of years ago. Listen to our shows. We were telling you, the Fed had no good decision. There's no good choice. Lower rates, don't lower rates. Fight inflation, don't fight inflation. It didn't matter. Here's what we know now, though, Jason. Right? They've told us, hey, we're going to try to grow our way out of it. That's what they've decided, which means we're not going to fight inflation because we got to somehow get GDP to be a whole hell of a lot higher. I mean, is anyone surprised gold's up on $30 today? No, you shouldn't be. $29.30. We are like $2-3 away from a new all-time closing high. How about silver? Get ready for silver. Up 45, 32, 82. By the way, silver is getting ready to switch to the March contract. 33.40 on the silver March contract. By the way, the silver, the gold April contract, 29.50. And Jason, all indications are, and I think B of A, they came out, I want to say it was Friday. Might as well just pencil in $3,500 gold, and I think that's a good starting point based on what we understand today. Wall Street in bubble territory, PE ratios in bubble territory, the Treasury Secretary admitting, hey, we can't make the Fed, we can't lower rates with the Fed. We're going to have to do other things to try to manipulate this 10-year note. And the best card they have is reevaluating gold and using that as a way to do quantitative easing.
Well, we've talked about this a lot the last week or so, and the changing the value of the gold. And I guess, Joe, one thing is they set the price higher. What is the physical price? Does the physical price get affected and just skyrocket, or does it just keep doing kind of what it's been doing, slowly going up? I mean, would there be a huge reaction?
Yeah, that's going to be interesting. The reaction. My guess. This is just me guessing. And I want to say this educatedly. Why is so much gold? It's overwhelming. The amount of gold that people are taking physical delivery of. People don't want to wait around. They're putting gold on commercial flights from London to get it. They don't care how it gets there. They're going to get it here. Did you see the story out of London? They tried to make, the reason it's going to take 8 months is because we don't have enough vans to take to drive it to the airport. I mean, right? I mean, I'm just have a feeling they can change it to whatever they want. And my guess will be that they will run up this price. So when they finally make the announcement, maybe it's $1 trillion of quantitative easing that they can do. And then I believe what they will do is they are going to attach gold to the spot price. So this thing could fluctuate, right? And now it'll just be worth whatever spot is. And the fact of the matter is, at that point, the U.S. government and the U.S. Treasury will essentially love higher gold prices. Because now, hey, it allows us to have more money. It allows the Fed to funnel more money to the Treasury. I mean, think about what $1 trillion could do. They could sprinkle it in and say, hey, we're going to do $50 billion a month. Well, that would be $50 billion that they wouldn't have to sell on the open market. Right? And do that. And hey, we can do a quantitative easing and we can make it last 18 months. 2 years, right? And we don't know what the number would they, or they could do it all at once, which I don't think that would be great. I mean, but they could. But this is going to be something and again, like I said, I'm looking at avenues. Now, could the Treasury do stuff that we haven't thought of? Yes. But when you look at the asset side of the ledger for the Treasury, I've given you the three. Property, which they should do anyway, right? And let's face it, if we're not using the buildings, sell them. It's not that much money. And let's face it, they're government buildings. You know what they look like, right? These aren't the Taj Mahal, brand new, right? These are, that building's old. It's been empty for years, right? Yeah, they're not going to it's not going to get a ton of money, but let's get some. Privatizing Fannie and Freddie? I mean, the housing market's already terrible. There's some money there, but not. The problem is Fannie and Freddie really take on the worst loans. The least amount of money, the smaller houses, the older houses, right? There's not a ton of value, if any, in Fannie and Freddie. They're probably right now, there's probably a little bit, but not that much. And then there's gold. And that's the easy bang for the buck. So are they going to do it? I don't know. But the drum beat gets louder. The amount of physical gold being taken in is off the charts. The leasing rates, buying paper gold right now, really sucks. It's super expensive. Everyone wants the physical. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. Like I said, gold's up big today. 29.30. Today is going to be it. This will be, barring a pullback in the gold price. Today will be the last day for you to be able to buy gold for below $3,000 to the ounce. Yesterday, we ran a special that I don't understand how it didn't sell, but it didn't. It was a 5-piece Canadian proof set. A 1 ounce, a half ounce, a quarter ounce, a 10th ounce, and a 1/20th of an ounce, 1.9 ounces. We set the price at way below cost. I still have it. It's hold on here. Let me make sure I got it right. Yeah. $5,700. Comes with its box, its cert. That puts it right at $3,000 to the ounce. But this is a proof. 1.9 ounces. Comes in this little pretty box and all that other great stuff. But this is something where you're looking at a cost of well over $6,000. So if somebody wants, if we don't sell it today, I basically, with today's gold move, I can actually sell it to the wholesaler and make a few dollars on it, but I'd rather sell it to you. And then $20 gold pieces. This will be the last day. If gold opens at $2,930 or higher tomorrow, forget it. $29.95 for a $20 gold piece today. Obviously, spend the extra $5. Buy the proof set first, then hammer the $20 gold pieces at 800-951-0592. Just since Friday, we've had a 1% increase in gold premiums on top of a 25-cent per ounce increase on silver premiums. And Jason, they're still rock bottom, but they're off the bottom here. As we were telling everybody, anything they could get their hands on, they were melting it down. Heck, they were melting down gold eagles. They're melting down bags of junk. Any silver eagle that wasn't perfect was getting melted down. I mean, they were going insane. But they've run out of people I guess, to sell, that want to sell. And now, all of a sudden, they're scrambling. Oh, my gosh, we don't have enough. Let's raise the premium, see if we can get more to come in. Just remember, Bank of America, a 10% increase in investor demand. That's what we do. $3,500 gold. I think $3,500 is going to be the number that ends up where they reevaluate. That's just my guess, since Bank of America is putting it out there. You now have to seriously consider the possibility of gold hitting 4,000, because that's what the Treasury wants it to do. But we'll have to wait and see. And like I said, I think silver, the same thing. We keep talking. Don't be surprised at $40 silver. Hell, Jason, I think right now, don't be surprised if it's 50.
Once it gets moving, it can just really move quick. And there's not a whole lot of support between 40 and 50, right, Joe? It could... It can go right from 40 to 50. And then if it passes 50, then what, right, Joe? Then it can just go to 60? We don't know.
Well, the amount of stuff that got melted, that's inventory lost, right? It's gone, right? Because they melt them into 1,000-ounce bars. And just imagine what would happen with the mint. You know, the mint last year minted 25 million ounces for Silver Eagles. What people don't realize is the year before they only minted 16. And now with everybody bringing, and when we give gold the headlines, don't be fooled here. They're buying silver like crazy as well. And just remember, here in the United States, 83% of our silver gets imported from where? 2 countries, Mexico and Canada. So you throw a tariff on, Jason, all of a sudden, right, now we've got a huge move that could be coming. And I think we're going to see that in both the metals. Final day below 3,000, $20 gold pieces, $29.95. You got gold at $29.30. And then, of course, that Canadian proof set, that is the deal of the week. I mean, this is, first of all, you never buy a proof set for melt, right? Ever. Just doesn't happen. And here you are, you're basically buying it for $70 over melt. And this is, the Canadians just do it better. I'm sorry. I mean, I've seen plenty of U.S. proofs. They're nice. This thing's spectacular. It's 4 9s. You can almost see your reflection in it. It's almost like a hologram. It's pretty cool. 800-951-0592. Take the time. Keep adding to your portfolios. If you want to convert an IRA or part of your IRA, call that same number, 800-951-0592. And more bad news out of London now. Spreads now between London and New York. Gold spread, $60. Listen to this. The silver spread up to $1. And that's something where New York and London are supposed to be in sync. Jason, I think this is just a big indicator that the London exchange is hemorrhaging here. And I think it's going to continue as people are starting to question whether or not they're going to be able to make guarantee deliveries for the physical buyers and what it's doing to the paper buyers. Listen, this is having a huge effect on the paper gold markets and the paper silver markets. I think there may be, you know what they say, when there's smoke, there's fire. all of a sudden, the huge increase in physical demand. Like I said, what's the huge increase? 1%, 2%? That's all it takes. We'll be back after the break. 800-951-0592. The Canadian proof set is gone. $20 gold, $29.95. Gold's up 32 now. $29.32. We're $1 away from a new all-time closing high. I expect it to be much higher than that. All right, so Bullion Star, this is an update. Whew. The London clearing banks, that's JP Morgan, HSBC, UBS, and then ICBC Standard, that's China, the Industrial Bank of China. Those are the 4 clearing banks for gold. Bullion Star is reporting they have depleted their available physical gold for delivery. All 4 banks are now relying on gold lending. However, these borrowing avenues appear to be exhausted as well. So this is a liquidity crunch going on. That means there's increased risk here. The reason why is London now selling at a discount? And the answer is they're running on what is called unallocated gold credit. The inability to have access to sufficient physical gold is now leading their paper gold claims to trade at a discount. So essentially what's happening here from Bullion Star is if you want the physical, you've got to wait. Or take cash settlement and don't get the physical, which now makes the paper gold worth less, right? Which makes sense, right? Hey, I want the physical. And I've got the April contract. I want you to deliver it to me. We'll get it to you by Christmas. I can't wait that long. Well, we can give you cash, right? We can roll over your contract, or we can just pay you cash. We can't give you the gold. And Jason, the wider this gets, the worse it gets. The wider the spread gets in the paper London market to New York, the higher you're going to see the gold price go. 800-951-0592. This is the first where I've seen officially, anyway, Bullion Star is reporting that all 4 clearing banks in London are out of physical gold reserves and now have to, quote, unquote, borrow gold from a willing participant. Now, here's the problem. They're speculating that the willing participants have dried up. No wonder why the premiums jumped. That makes total sense. If that's true, if that part is true and they don't have willing participants willing to lend them their gold, then all hats are off on this trade, Jason. Then you're talking about, I mean, they technically don't have to default. I wonder if they could force cash onto these paper claims. I think they can, and that would set off a firestorm.
You know, lending gold to cover, borrowing gold to cover. It sounds like they're using gold as money is what it sounds like, isn't it? Sounds like they're using this gold as money when they're borrowing it and lending it, right, Joe? So it's kind of interesting how all the years I've been in gold and silver, and we haven't been hearing this kind of stuff, and now it's gold is sounding a lot more like money suddenly. Suddenly banks and everybody else showing interest. It's all over the airwaves. It's encouraging, Joe, that you can actually watch the responsibility of money actually come back a little bit.
Yeah, it's something where obviously this is great for the gold price. You can probably tell I'm pretty excited about this. This is something where for a lot of years people have talked about these paper markets and how it led to the suppression of the gold price. Well, it did. That's true. But eventually, right, it snaps back. And right now, are we approaching this snap back period where all of a sudden this big trick we played to suppress the gold price has broken, and now all of a sudden you get a slingshot in the gold price to make up for the suppression of the price, right? And these happens in it can take decades. And Jason, in this case, it did. This took decades to happen. And I think it was just we are getting closer and closer and closer. And then this talk of tariffs that was it. That was enough. Remember, Donald Trump put tariffs on his first term. Nothing happened. Right? Gold didn't do anything. This time around, Jason, it's a much different scenario. And we'll wait. Obviously, we're going to wait and see here. But it does kind of add up. We don't know, but it just seems like these banks kind of have information the rest of us don't. And all of a sudden, it seems like there's just demand for the physical coming everywhere. People that normally were buying contracts, paper contracts that would never take delivery are now taking it. 800-951-0592. Patriot Radio News Hour. Joe and Jason, we're going to wrap it up right after this. 800-951-0592. Patriot Radio News Hour. Joe and Jason wrapping up this Tuesday. Gold is flying again, up 34 now. 29.34 would be a new all-time record high. Close, if we close here today, well, up 35, 29.35. Here we go. Buckle up. $20 gold pieces. I'll hold the price to $29.50 today. If gold goes and does something crazy after $29.50, I can't honor it anymore, but I'll do it. But this is it. You want gold below $3,000 an ounce? $20 gold pieces, $29.95 at 800-951-0592. Listen, I got rolls of dimes on sale right now for $120. That's a whopping, ready? $2.70 over melt. That's it. You're buying U.S. hallmark silver for not you're not buying it. I'm talking over melt, right? So melt right now on a roll of dimes is $117.30. Selling them for $120. Yeah. Get it. I mean, think about. Well, let's do it for March. March silver is what, 33, 35. It'll be on the March silver, Jason. We're talking about 78 cents over melt. So essentially, listen, you can buy silver dimes today for pretty much melt at $120. $20 gold pieces, $29.95 at 800-951-0592, and it just looks like here the squeeze continues. I think a lot of people were hoping, Jason, for a let up that maybe people would back off here. That okay, you've locked up enough gold. That appears not to have been the case, and it looks like, based on the spreads this morning, the squeeze is getting worse out of London now to where their paper contracts are actually trading at a discount because people don't think they can actually deliver.
Well, $3,000 gold, and we knew it would get here sometime, but it's happening, and I mean. You go on the internet, it's $3,000 all over the place already, Joe. So it's good if you can jump on some of this stuff now because it doesn't look like this is going to stop happening. I don't see any indication why gold is going to have some huge pullback right now, Joe. It's just here's the thing: is it's grinding up slowly. So I don't see why it will stop doing what it's doing, Joe, and it just keeps moving.
Yeah, and again, it's. You know, we talk about economics 101, supply and demand. I fully admit I am giddy right now because this is something that a lot of us in this business have talked about for years, about how they would hold the price down with these paper contracts. And the market, listen, it hasn't broken yet. But it's stretched out. It's like that rubber band, right? It keeps stretching and stretching and stretching. If it snaps here, the question will be, how fast will it be $4,000? A day, 2 days, 3 days, right? And then, of course, does it go to 5? Patriot Radio News Hour.